G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Alright, let's go. Today's Sunday walk and talk. Here's going for a nice Sunday winter walk again with my dog, Charlie. Stops and starts all the time. Yeah, loves to have a sniff, so he's been there. So they mark their territory as well. Fun. Alright, so today's video, we'll start by talking about the jobs market and what I saw there going through the week. So we had PMI numbers for services and manufacturing that weren't very good. They were below expectations. We also had ADP numbers that were 150,000 below 163, I believe, thousand expected. And then we had the non-farm payroll numbers come in better than expected, 206,000. And we had unemployment rate, which was 4.1%. And yeah, it wasn't very pretty, especially as they dressed up the numbers. And I was showing you in the video, I talked at the job market, and CNBC anchor was saying that 3/4 of the jobs that they were added were government jobs, which was quite staggering. So, and the revisions for these job numbers, I read an article from Kabassi letter that was saying that the revisions were like 10 to 15 months, I believe it was, but yeah, it was being revised lower because I was ashamed of how poor the numbers are. And yeah, a lot of government jobs will make up the majority of them, so a bit disappointing there. So we've got 4.1% reading, and the SARM rule, which I mentioned as well, has not been triggered yet, but we're on the cusp of being triggered. The SARM rule, which is a pretty much 100% accurate indicator for recession. So we're 0.43%, almost there. So yeah, I believe it's inbound. It's only a matter of time. The next couple of months we'll see how that tracks. All right, let's talk about the next topic, which is the ETH ETF, which I thought will be released this week and start trading on the stock market, but it didn't happen. Did not happen because the SEC just don't know how to make up their mind. They're back and forth. They're losing really badly in courts and can't get a grip on things. They're very inconsistent. Need to get rid of Gary Gensler. He's an absolute buffoon. Anyway, that's opinionated. He's just doing his job, but he's been very pushed by the politicians and getting the E thing that was proved, wasn't supposed to be proven in the first place, but he was forced to prove them due to political pressure. He won't admit that, but that's what really happened. And now we're waiting on the S1s to get approved. And yeah, it's only a matter of time before they do happen, and we get the trading of the ETFs, which is probably mid this month or end of the month. We don't know yet, but they're saying either. It's not decided. Where the timing matches up with a certain, I don't know what's going to happen. They're doing it specifically to what they are preparing, so we'll see what happens there. And also, I was looking at the chart for Ethereum from good old Ben Cohen, and it was saying how similar price action is to 2019 and 2016. Those times were, one was a halving year, one was pre-halving year. 2019 was similar because of the rate cuts we had, and we had, after the first 2 or 3 rate cuts in 2019, we had ETH actually bleeding, declining rapidly. And then 2016 was similar, where price had a drop off, but it actually diverged with Bitcoin at that stage. Bitcoin was going up and ETH was going down. And then we had the ETH BTC pair, ETH versus Bitcoin, and relatively like I've mentioned in the video how we had similarities in the patterns of each 2016, 2019, and then now it looks like very similar the way it's sort of structured. We had a breakdown, had a false breakdown in 2016, like June, July period. We had like a false break, and then it shot back up and then sort of traded sideways, and then it definitively broke down at the end of the ETH Bitcoin pair. So, and a quick capitulation, then it rose back up sharply. So that could happen as well. And then alt season would start at the end of the year, but I don't know. It needed to form higher lows to be determined on that front. So that was quite interesting data to sort of to compare and have a look at for Ethereum there. And next topic, we're talking about the German government selling Bitcoin, just dumping it by the billions, and yeah, it shocked the markets, and we had a huge capitulation, a huge sell-off. Bitcoin was down like 7% for the day, and I mentioned this in the video. It was absolutely brutal. It was just terrible. And Mt. Gox creditors getting their Bitcoin back all happened at once, guys. Just absolutely fear to the max, and I've seen worse fear, worse days than that. But we had another event, like liquidations were calculated, and they came in more, than expected. Like the liquidation was worse than the FTX collapse in November 2022, which was quite staggering. We had a terrible liquidation there for the longs, got absolutely wrecked, and now we're getting a little bounce, and the shorts are getting wrecked. So it works both sides. So don't trade leverage, because you end up getting wrecked, and that's just not the place to be. I've done trading before, and I definitely don't recommend it at all. It's a losing game, because you can't rely on chart patterns and candlesticks and all that. It's just a bunch of nonsense really, at the end of the day. There's too much to look at, too many factors, and just stick to investing, buying and holding, selling when the time is right. So investing's the way to go, and that's what I've done and developed a strategy around that, which I will make a video about my strategy and go through the historical periods, times to buy and sell according to the strategy, and how to develop your own strategy, because that's what's important, is set up a criteria which is met. What's he doing? To see whether it's the right time to buy, and then take profits at the end of the day. That's what we're here for. Okay, we had looked at the housing market really quickly. In the housing market, I did a video about the HGX, how it's breaking down, it's losing support, it's going lower, and it's diverging with the SPX, which is the stock market, and it's not looking good. Where I've mentioned in previous video, in previous chart times, that some examples going back to 2005 and 7, 2011, 2018, 2020, 2021, 2022, and the bottom of the 2022, and then now we're seeing it again, is divergence between the housing market and the SPX, which is not a good thing. So yeah, look at that mess. I don't know if you can see it, but look at this, guys. There, look at that. There's silver things. Gosh, horrible. Gas starters, people, they inhale them, and yikes, and they just dump them there. Absolute mess. But yeah, and the other news about the housing market, so I saw a chart, it was posted on Twitter, a guy called Eric, can't pronounce his last name, but he posted a chart of commercial loans and to developers, and they're declining rapidly just recently in the past month or so, and that's going down sharply as banks are pulling back on lending to developers as the risk of commercial real estate continues, and that's another bubble that I could see coming to a big collapse. We'll see how we go there, because the commercial real estate market's a bit of a frothy one with the valuations and buildings, just because people want to work from home, and it's just, yeah, it's an absolute the valuations have dropped staggeringly. People have made videos about this. A guy called Rapon Investments made a video about the commercial real estate market and how office buildings are just getting slashed in valuations, and your negative equity, you're losing money on them. Just horrible. So, and that could trickle down to the residential market, which is the next bubble, I believe. The housing market is the residential housing market of 2008, which is definitely due to the real estate cycle, which I've had a look at. We're coming up not far away from that. We're coming to grips with that, the 18.6 year real estate cycle, which has worked for, I believe it's 200 years of history. So it goes back a long way, and we have cycles for all different markets. We have business cycles, which we're coming to the late stages of that. We have Bitcoin cycles, and we have real estate cycles, and many other cycles to do with how the economy is functioning. So yeah, anyway, that's on the housing market front. We like to also talk about what's coming up, and inflation numbers are coming up. CPI is about to be reported next week on Thursday night here in Australia, and yeah, it looks like it's absolutely critical what the Fed do there, whether we see a flat read or get to declining numbers. We'll have to wait and see, because the current reading's at 3.3%. So yeah, whether we get a uptick in inflation, and that would really start to get people questioning whether we're in a stagflationary period, which is what Fed Chair Powell joked about in a couple of reports back, where he said that I don't see the stag or the inflation. So yeah, we'll see what happens there on that front, because I'm seeing, as a chart that I saw on Twitter, talks about the shipping rates around the world, a few different shipping routes, and they're all very similar, and they're all suggesting that they're taking off. The prices have bottomed, and the rates are absolutely skyrocketing right now. So whether we see a correlation back to the norm of normal CPI inflation tracking back with shipping rates, and seeing an uptick with the shipping rates, because I believe, because it's going back, go back a fair way, and it has been tracking it, but it has been deviations, and we've seen an 8-month lag in this data, and it's surging for 8 months while the CPI is staying flat. So it definitely is a warning sign there that we could get an uptick in inflation. We also see copper breaking out and shooting higher, gold and other precious metals, silver. So the signs are happening, and and oil as well. So yeah, it could get an uptick in inflation due to commodities signaling as well. So you can combine all these factors together and make up your own mind, but I'm not in a predictions game, but I believe that we have a strong case to make, and we'll see how we go there. So yeah, I believe we have to stay strong through this period. Is just keep working hard. We can't do anything about it. You can't change the way things are run, the government, the Federal Reserve, and we just got to keep working, help each other out in these tough times, slow down the economy, and we don't know what the future holds, but just got to stick to got a plan. You've got to have a strategy in place. You're a stock market investor who invests in index funds. If you're a regular DCAer, you're sitting pretty good. I wouldn't worry there. Just stick to your strategy. If you're a Bitcoin DCAer, it's a similar thing. I think Bitcoin will do really well in the long run. It's definitely a proven asset for 15 years. So keep DCAing that. If that's your strategy, that's fine. I wouldn't DCA anything in the altcoin market. I wouldn't touch anything but Bitcoin as it's proven over time. And yeah, if you're a gold investor, it's doing pretty well, as it's really been stagnant for a long time, and it's finally breaking out. And I see the GDX miners are like a 10-year like consolidation, and we're finally breaking out there. So that could show us that we're having a pretty rough recession. We'll see how we go. But for commodities, energy, you know, looking pretty good. Yeah, if you're not invested at all and you're just working a regular job, just stick to it. We'll get through it as we have these ups and downs in the business cycle. And yeah, just keep your head up high. We're gonna do well out of this. If we do have a crash, be prepared. Have some cash on the sidelines. Make sure your savings are strong. Make sure you're sitting pretty healthy. Your health's good. You're going for walks like these. And I'm back at the channel, as you can see. I don't think dogs get in there. It's a bit cold and I get a bit dirty, so probably walk back the way we came. It's the same as the other video. I'll probably go for a different track next video. I'll probably walk down the walking track, and it's a bit cleaner. It's not as dirty as this one. As you can see, I just work on the dirt track the whole way. So yeah, all right, I'll leave it to this one, and I hope you enjoyed the video. Please smash the like, comment your thoughts below, subscribe to stay updated, and I'll catch you in the next one. Cheers.